Hello, welcome back to this FinGraphs podcast, the first one since deconfinement in Switzerland. We're going to look at Bitcoin today and try to draw parallels between its performance and other risk assets. And our view is that probably Bitcoin would follow risk assets higher, probably resuming its uptrend over the next few weeks into mid-late summer. To do so, we'll first look at the daily graph of Bitcoin on our fingraphs.com platform. What we could see is that it followed risk assets quite closely during the March sell-off with quite a strong sell-off, more than 40%, almost 50%, and with a strong rebound since, which has practically made new highs. This reminds us of many of the growth sectors, possibly the Nasdaq, which is also making new highs, probably slightly weaker here on Bitcoin, but it's still a very, very strong recovery. Now, since early June, we are in an intermediate correction, we believe. If we take the sheer numbers based on a volatility, it may lead us back down to the 7,600, possibly down to the 600 range, so quite a deep retest. But we are bringing more cross-asset views further out in this podcast, as we believe this is probably much too aggressive. Nevertheless, such consolidations usually last 3 to 6 weeks, which means that there's probably 2 weeks more risk into here, probably towards mid-July, before we can call the resume uptrend situation we expect into the summer. So we wanted to look at Bitcoin versus a series of other cross-asset drivers. So here we have the weekly charts. So these are the longer-term charts with 4 years of history. And first we have Bitcoin here. Then we have Treasury yields, so 10-year US Treasury yields in this second chart, Euro dollar, and the mini S&P future. When we look at all these other assets, what we could say is that the most resemblance, in our view, can be made between Bitcoin and possibly the euro dollar, as they both topped out in early 2018, late 2017 for Bitcoin, and probably corrected down in quite a flattish move into early 2020. Now, Bitcoin is a bit more positive because it basically made its lows late 2018 and has only seen a retest early this year, so didn't make new lows. So that probably corroborates the fact that we think it's probably still in a long-term uptrend. Now, for now, our FinGraphs indicator doesn't confirm that yet, as it does take a bit of time to turn around. But we believe that possibly, looking at the price action, 2018, 2020 may have been quite a volatile consolidation range. Now, it's also interesting to note that the recovery, which was quite strong in early 2019, and the stabilization did probably coincide with the beginning of quite an accommodative policy by central banks from early 2019. And we could see the strong recovery, which coincides with lower treasury yields throughout the period. What we could also say is that the mini S&P future, which had been in a very strong linear uptrend between 2016 and 2017, probably started what is a 2 years consolidation, probably in a widening triangle, as we could see here, and that it too took a hit in 2018, was quite strong during 2019, and also experienced the sell-off early this year. So our view is that the Bitcoin is pretty much advantaged when interest rates remain low, is following euro dollar to a certain extent, and is pretty much a risk asset when we compare it to the S&P 500. Now, we look at the same comparison on a daily basis, and we've gone a bit further. We've done some data mining and tried to find which equity markets were the most, or sectors, were the most correlated to Bitcoin. And these relations have changed over time. But what we could say is that at the moment, and as we have seen probably over the last couple of years, Bitcoin does have a similar dynamic as kind of growth defensive stocks. So you could see it here compared to, for example, the consumer discretionary ETF, XLY, or the food and beverage sector in Europe, SX3P, or the consumer services ETF, IYC, in the US. And we believe that the dynamics of Bitcoin are quite similar to the dynamics we have on these various growth defensive sectors. And all these, in our view, are slightly more positive than Bitcoin and showing us that we could probably resume our uptrend during the next couple of weeks, probably from mid-July, and then move up into August and perhaps September, possibly towards new highs, where we are already on the consumer discretionary ones here, and possibly approaching those new highs on the food and beverage sector in Europe. So the analogs we could find, and that was a result of that data mining, seem to support a new uptrend on Bitcoin during the summer, probably starting from mid-July. Now, we just wanted to have a shorter-term view at Bitcoin, and this is the hourly graph, which we could see topped out after a spike here in early June. It is still in a downtrend, but we're slowly getting oversold here. Our risk index is in a low-risk position. There's still a bit of time here, so these 1 or 2 weeks left of consolidation, and here we think the range is quite valid between 8,900 and 8,600 for an additional dip. And from then on, our envelopes are also touching each other. From then on, we could probably expect a resume uptrend situation into August and probably even until September. If we do make it above 10,000, then you could probably expect quite a strong acceleration, probably towards 12,000, 13,000 into the summer. That's all for Bitcoin. As we take up our podcasts again, we wish you a very good trading and speak to you soon. Thank you very much.